Hello and welcome to Gradient's weekly roundup of key business and financial developments in Sri Lanka for the week ending 19th August 2022. Here are the top stories for this week. Domestic debt may also be restructured, says President. Boost to Sri Lanka's exports from UK's new trading scheme. Central Bank maintain policy rates, cites economic contraction. S&P lowers rating on sovereign bonds on missed payments. We will also briefly look at other notable news that made it across to our news desk and wrap up with the capital markets update. In our main story this week, President Ranil Wickremesinghe said that Sri Lanka's international sovereign bond holders may push for inclusion of domestic debt in the restructuring process. He noted that bondholders alone may not be keen to accept a steep haircut under a debt sustainability plan, a prerequisite to secure an IMF bailout. With pension funds and banks being large holders of domestic debt, any restructuring could have major implications on the EPF and banking sector. On Tuesday, the United Kingdom government announced the launch of the developing countries trading scheme. Effective from early next year, it will replace the current GSP scheme. Sri Lanka is among 65 countries who will benefit from lower tariffs and simpler rules of origin requirements for exporting to the UK. Sri Lanka's annual exports to the UK are about $950 million, roughly 8% of exports. According to Sarah Halton, British High Commissioner, Sri Lanka will continue to benefit from duty-free exports on over 80% of products, while tariffs on 150 additional products will be removed. On Wednesday, the central bank maintained policy rates, citing a larger than expected contraction in economic activity and a faster than expected easing price of pressures. It further noted that current monetary and fiscal policies and limits on non-urgent imports to result in a notable decline in credit to the private sector and upside risk of near-term unemployment. S&P Global Ratings lowered ratings on 4 of Sri Lanka's sovereign bonds to D from CC, citing missed coupon and principal payments. Moreover, it kept the outlook on the long-term local currency rating at negative. This was deemed due to high risk to commercial debt repayments over the next 12 months, given the country's economic, external and fiscal pressures. In other news, on Tuesday, the central bank lifted the mandatory requirement to convert dollar proceeds on services exports. This is effective from August 12th. However, it maintained the requirement to receive export proceedings within 180 days. According to the central bank, during the first half of 2022, $1.5 billion was received as service export receipts. According to the SLTDA, tourist arrivals in the first 11 days of August were over 16,000, bringing the full year figure to over 475,000. On Friday, the government relaxed emergency regulations. This will help tour operators promote Sri Lanka as a tourist destination. Following this announcement, the French government relaxed its travel advisory from recommending only essential travel to exercise caution. According to Kanchana Wijesekara, Minister of Power and Energy, Adani Green Energy was issued provisional approval for 2 wind projects worth over $500 million. This entails a 286 megawatt project in Mannar and 234 megawatt project in Punareen. And now let's take a look at the weekly movement of the All Share Price Index and the S&P SL20 Index at the Colombo Stock Exchange. At the Treasury bill auction held on Wednesday, yields on 91-day term maturity rose, while 182 and 364 tenor were more or less unchanged. Of the 105 billion rupees worth of bids, 60 billion rupees were accepted. Here's how the rupee performed against the dollar this week. In other market news, the USAID and David Pierce Motor Company are to facilitate the electrification of three-wheelers. DPMC will convert engines to electric and offer after-sales services, whilst the USAID provides technical assistance to DPMC and establish a network of charging stations. And that's a wrap for this week. Follow us on LinkedIn and YouTube for more updates on business and financial developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.